Welcome, everybody. Let's go ahead and get started. My name is Miles Hansen. I'm the president and CEO of World Trade Center Utah. It's so great to see so many of our friends joining the call this morning. We're grateful for all these Utah companies that are coming to hear from the experts on what is going to happen in China now that we know the outcome of the election. What does this mean for U.S.-China relations, and what does it mean for Utah companies who are out there, competing in global markets around the world and doing a ton of business with China, either selling into China or sourcing from China. This is a critical topic. The timing is phenomenal. And so very, very grateful to Dorsey, Troy, Catherine, Justin for making time out of your busy schedules to be with us and partner with us on this event today. And also very grateful to Anna from the U.S.-China Business Council, such a phenomenal resource, working to help the business community, both in the United States and also in China, work through some of these geopolitical issues that we'll be touching on today. For those that aren't familiar with World Trade Center Utah, we exist to help catalyze growth for Utah companies, whether that's increasing sales internationally, finding the right capital and investment partners anywhere in the world, as well as sorting through challenges and opportunities on your supply chains. We offer a range of services. We can help you identify partners and markets, and in working with the partners that we have here locally and around the world, we want to plug in and help support your growth. So anytime, anything we can do to assist, please reach out. We'll put our email address in the chat room here. You'll get an email after. We want to be your go-to resource and help you engage as we work with many partners here locally who are working side by side with us to help lead Utah's international business development. We do a number of webinars. In fact, right now we are working with Saudi Aramco. There is a webinar happening concurrently to this one. I just finished up a different Saudi meeting this morning. Next week, we're doing an event on Russia, then another one on Jordan, and then coming soon, an event on doing business in Japan. And so please reach out, get involved, let us know what challenges you're having, and we want to be eagerly engaged and anxiously engaged in helping you go and compete and win internationally. Again, I'd just like to recognize our partners on today's event, Dorsey and the U.S.-China Business Council. Great to see Franz Kolb from the Governor's Office of Economic Development. We work very close with the Governor's Office on doing this international work. We're grateful for Franz and his partnership. And it's great to see so many companies that we're working with. I think if you look at the attendee list, you see very large companies from here in Utah. You see medium companies, growing smaller companies. And it just underscores to me how important China is for Utah's economy. Before I hand things over to Troy and we jump into the panel discussion, we've done a lot on China over the past 18 months. Anybody doing business in China knows that it's been a dynamic environment and situation. There are changes happening, and for companies to continue to engage, they need to stay on top of these geopolitical dynamics and understand what it means for companies. And so we've worked with many partners in China, the Chinese Embassy, the Chinese Ministry of Commerce, to provide trainings to Utah companies. We've worked with Senator Romney, who is leading out nationally here in the United States on the federal government's engagement on working on some of the challenges in the U.S.-China relationship. We've done events with my former colleagues at the White House, the National Security Council, who've been working on China. And we've been working with law firms that are very well established in China, like Dorsey, who have great expertise. Our mission and our objective is to help Utah companies be very clear-eyed about the challenges and the opportunities, to be connected to the very best experts, and so that they can then decide for themselves what makes the most sense as it relates to their business in China or strategies or plans to engage in China. Before jumping into things, is a result of all this work and working with Utah companies and hearing from these experts, I just thought I'd share a couple framing perspectives before we hand it over to Troy and we jump into the panel discussion. One is that the U.S.-China relationship has fundamentally changed over the past 5 years. 18 months ago or so, in the midst of the trade wars, there was a sense among many Utah companies that if there could just be a trade deal, everything would go back to the way it was. And as we learned, and as we are learning now, that's simply not true. There is no going back to the way it's been for the past 40 years. For 40 years, there was this bipartisan belief, a very consistent policy here in the United States, that if we worked very closely with China, if we helped China develop economically, that would lead to moderation in their political structure, that would lead to moderating behavior in some of the areas where we do have concerns, whether it's with Taiwan or the South China Sea or it's human rights abuses in China. And starting about 5 years ago, there was a recognition, and this was at the tail end of the Obama administration, that policy of strong economic engagement was not working. Rather than leading to moderating behavior under President Xi, we've seen an increasing aggressiveness coming from China. And so the tail end of the Obama administration, there was growing concern and a recognition that we had to change course. That obviously is accelerated during the Trump administration. But the point I'd like to make here is, and the panelists may disagree, I look forward to getting their perspective, but just like we couldn't expect things to go back to normal because of a resolution to the trade dispute or a trade deal, things are not going to go back to the way they were under a Biden administration. Concerns over China are very bipartisan in nature. Anything that Nancy Pelosi and Mitch McConnell agree on, there's not many things right now, but China's one of them. And there's differences in style and substance and areas of concern, but there is going to be continued concern about China. And so I would not expect any Utah company to see things going back to the way they've been over the past 35, 40 years, just because there's going to be a change in administration. And so there's a lot of things to be concerned about. There's going to be a lot of challenges as we move forward. On the other hand, Utah and China have a long-standing and very strong people-to-people ties. It started back in the Transcontinental Railroad, as we know, was completed here in Utah. There were a lot of Chinese workers. They stayed, and so Utah had a surprisingly large Chinese American population early on. Helen Foster Snow, was a woman from Cedar City in the 1930s, went to China, became a very prominent figure there in China, a heightened awareness in China about Utah. 1979, the BYU Young Ambassadors, the dance group, went and performed all over China. And in the late 70s, early 80s, there wasn't a whole lot on TV in China. And so there were reruns of those performances broadcast all across China, which again created more awareness about Utah in China than what you'd expect for a small, from a population perspective, a small state in the United States. Of course, starting in the 2000s, Utah invested significantly in Chinese Mandarin immersion programs. We now teach 20% of the Mandarin immersion in the world. I'm sorry, not the world, in the United States, here in the state of Utah, a state with about 1% of the population. And so we have these strong ties between Utah and China, and they're in all areas. It's art, it's education, it's sports, it's trade. And these ties are enduring. And so the question for us today is, given the geopolitical dynamics, given the strong ties that exist between Utah and China, what does that mean for Utah companies? How do you engage? How do you navigate these uncertain waters and the increasingly challenging waters that we find ourselves in? And that's why I'm so grateful for Troy and Catherine and Justin and Anna for spending time with us today to help us understand what we should be thinking about as business leaders as we see these changes taking place in China. So Troy, with that introduction and so those framing remarks, I'll go ahead and hand the baton over to you. Troy is a phenomenal partner. Troy, I was thinking about it. We've done these events. We've partnered on these types of events with the United Arab Emirates, Qatar, India, China. I'm sure there are others, but I just want to make sure that if anybody doesn't know Troy, reach out, get to know Troy. He is phenomenally well connected, super smart. He sends out an email about a weekly basis. It provides updates on the pandemic. He's been doing M&A work for the past 20 years in joint ventures and corporate governance, securities, capital markets, and government and legislative affairs. And he is truly somebody who is a troubleshooter, who knows how to plug in and support companies to help them solve problems, to help open up growth opportunities for them. So Troy, thank you for being such a great partner. And I'll go ahead and pass the baton over to you.
Miles, thank you so much. Thank you for the kind introduction as well. And I love the way you brought it home for Utah. That point you made about the young ambassadors that went to China back in the late 70s. When I've been in China doing negotiations, I think 3 different times now, especially with someone who's a little more senior, they will bring that up. They will mention, if they hear that I have Utah ties, they'll say, "Oh yeah, when I was growing up, that was on TV all the time." And I don't know if it was a lack of programming or they were just that good, but for some reason they were on there quite a bit. Okay, so let's go ahead and get rolling. What we're going to do is I'll do some introductions and for the panel members, and then we'll move right into hearing some opening remarks from them, and then we'll get into questions. And those, in the meanwhile, though, you should feel feel free to put your questions in the chat feature, and we'll probably get to those towards the end. But if they're more relevant sooner, then we'll do it sooner as well. So with that, let's go to some introductions. So Anna Ashton, as Miles mentioned, she is with U.S.-China Business Council, which is, in my mind, kind of the premier institution for helping U.S. companies do business in China. And they work on policy issues, they work on geopolitical issues, and Anna is she is their person for policy. And you'll see her on the Hill here in the U.S. You'll see her on media all the time. In fact, she doesn't know this, but a couple times, I've been with friends and she's been on CNN or NPR or BBC, and I'll say, oh yeah, Anna, she's a friend of mine, and they believe me or they don't, but it's very useful. And Anna started her career at the Department of Defense as an intelligence officer, and since then has been at think tanks and business institutions like the U.S. Chamber of Commerce. I've worked with her with a number of our clients, and she's just amazing. So we're really fortunate and glad to have her here today. Catherine Pan is a partner here in our Dorsey office. She is in our New York office where she heads the corporate group. And more relevant for this conversation, she is also the head of our firm's U.S.-China transactional practice. And, a lot of times firms will sort of say, oh yeah, we've got a U.S., wherever, U.S.-Canada, U.S. wherever practice. Dorsey, this is one of the things that sets us apart as a firm. Catherine heads the team. It has a group in New York. It has a group in, several groups in our China offices, and their sole focus is on helping companies do business between those two countries, and she's been doing it for many years. And she's really seen as one of the leaders in the legal field in this area, probably the premier, most prominent Chinese-speaking business lawyers in America, and is relied on by some of the largest corporations and financial institutions. She's a leader in our firm and a real star in international business. Justin is he recently joined Dorsey, and what I love about, lots of things to love about Justin. One of the things I love is that, he's based in our DC office right now, and that's where he's had his career. I'll mention here in a second, he was in government and worked on his cross-border security issues. He has Utah roots and is in the process of moving back. I think all he has to do is find a house, which is no easy task these days in Utah, but he can give us an update there. Justin is, so he worked for many years in Treasury, where he was on that committee, was deputy director in that committee that everyone refers to now as CFIUS or CFIUS, however you like to say it. And that is, a very kind of an obscure committee when I started practicing law, but over recent years it has become incredibly important because it is the committee that reviews investments into the U.S. From foreign investors. And so Justin has reviewed hundreds of those on the government side, and now he is helping advise companies on how to get through those reviews, or when it might make sense to go a different direction. And so he's an excellent advisor, and we're lucky to have him in at our firm, but frankly lucky to have him in Utah. So with that, I am going to turn it over to Anna first, and we'll go Anna, then Catherine, then Justin, just to hear some opening remarks from each of them, and then we'll get into a few questions. So Anna, over to you.
So just really quickly to clarify, do you want me to do the intro remarks that went with the question that you presented to me in the email, like what to expect in the next 4 years versus the last 4? Or shorter?
Why don't you say whatever is most on your mind? I know we have USTR rep. I'll ask that question probably a little later. So just whatever is, like, you woke up this morning and you worry about this stuff every day, whatever's on your mind, Utah people might be interested in.
Sure thing. Yeah, sorry about that. I guess I have a handful of questions that are most on my mind. One of them is, what is the Trump administration going to do on its way out that may constrain the incoming Biden administration's actions when it comes to the U.S.-China relationship? We've seen a lot of activity, and I expect we'll see more. Another is Biden's appointments. what do they convey about the approach we're likely to see? Yesterday, it was announced that Catherine Tai is likely to be chosen to be USTR, and that alone is a significant choice that's worth unpacking. Third, China's orientation toward the next administration. Does Beijing have appropriate expectations and a real appreciation of the US political climate? And likewise, is China going to be willing to make changes to certain policies that really threaten to undermine commercial relations because of the policy realities here? So for instance, the human rights issues that were raised. And then finally, how will this tug of war that we've been seeing between national security and economic security play out? And can the economic opportunities in the relationship be better leveraged for more Americans? And I will stop there.
Great, thank you. Catherine?
Sure, thank you. I'm glad to be invited and to speak with such a panel of experts. There are a lot of things on my mind when I woke up in the morning, even though I try to do 10 minutes of meditation a day to start my day. But sometimes I got distracted by some thoughts regarding US-China relationships. I closely watched the trade, the phase one deal. I wonder if there will be movements towards a phase two, or at least at the beginning of a phase two. As you all know, Utah and China are trading partners. Utah basically does about $4 billion a year, minus or plus, in its trade with China. But in recent years, the number has decreased, probably as a result of the trade war. But the war between US and China is not just really limited to trade. It's an overall rivalry, at least a rivalry between trade and technology, I would say. And more than that, I think it's a rivalry of two systems, how we run our countries, right? So it's a rivalry of two systems. So I really agree with what Miles said at the beginning. I don't think a change of administration will trigger any fast or drastic changes. Choi, if you can go to my slide number 3, I actually summarized some of my. This is actually a really good slide, just to show you the things that are at the center of US-China relations. These are the things I, check basically on a daily basis when I read newspapers, when I listen to radio. I want to see movements on all these fronts. All these so-called anti-China bills passed recently were passed either unanimously in both the House and the Senate, or unanimously in the Senate, and then 1 or 2 votes against it in the House. So those are all truly bipartisan efforts. So the first one relates to investments from China to US. And my colleague Justin Huff is a national expert on the CFIUS issues. So I'm going to defer to him to talk more about it. But the Hong Kong issue, the Taiwan issue, the human rights issue, especially the Uyghur forced labor impact on the supply chain, then the Holding Foreign Companies Accountable Act, which passed a few days ago, again unanimously in both the Senate and the House. And then there's a pending bill, the Secure Campus Act. All of these are, as you see, got bipartisan support. So it's going to continue to be, I think, a challenging time, but we have good hopes because China kind of came out of the pandemic already. There are a lot of investment opportunities in China. So some of you may know that a very large private equity fund in Utah, the WASAC Global Investors Fund, launched a new Greater China Fund. They're going to invest in a portfolio of 35 to 50 Chinese companies in the next few years. The fund was formed in late November of this year. And I think they're smart to look at that side of the world and try to capture the market opportunities. Again, even though we're still dealing with all the uncertainties, hoping for the vaccine to rescue us, China has already gone out of the pandemic. The GDP is back to phenomenal growth. A lot of companies have presented wonderful investment opportunities to investors around the world. So even though there are a lot of challenges, there will be opportunities as well.
Thanks, Catherine. Justin?
Hey, good morning, everyone. It's great to be here. And I am excited to move back to Salt Lake City and get back to my roots and be out west. I think I echo many of the same concerns and issues that Anna and Catherine and others have raised this morning as it relates to Utah and U.S. policies related to China. The relationships are important, but as I watched the transition from the end of the Obama administration, while I was at the Treasury Department at the beginning of the Trump administration, we saw the two parties come together on these issues. And they certainly adopted a bipartisan approach in how they're going to deal with China and the types of concerns that they have. And so it'll be an exciting period over the next few months to see what the Biden administration does as they evaluate what the Trump administration's policies have been over the last 4 years, what changes they might make over the next couple of months or over the next few years, and to see if China will in fact move and make some changes that'll allow the two economies to work together again in a way that is beneficial to both U.S. and Chinese companies. So I look forward to sharing some additional thoughts going forward about some of the challenges, Troy.
Excellent. Thank you. And thanks everyone for those introductory remarks. Let's dive into some specifics here. Anna, so we've all sort of mentioned the change, sort of, kind of a change with the Biden administration, kind of not, because there's a lot of bilateral support for being tough on China. But a lot of businesses in Utah and around the country are very interested in what's going to happen on the tariff side. And so I know this is a question you have answered probably every day for the last couple of years. And people are always hoping that you'll probably come back with a more optimistic answer. And I don't know if that's the case yet today or not. But where do you see those headed, and what's your view on that?
So yeah, definitely something that all of our members are very interested in getting a good answer to. So far, what we've heard from the Biden campaign and also from President-elect Biden more recently is that he has no intention to just immediately roll back the tariffs that were imposed during the lead up to the Phase 1 agreement. And that's, I think, not really surprising. Number one, I think the Biden administration is going to come in with a lot of domestic issues that will take primacy in the first few weeks. And number two, as much as we may not have, as much as the policy approach that the Trump administration has taken towards China may not have been the approach that Biden or Hillary Clinton, if she had won, would have taken. I think there was strong consensus in 2016 that there needed to be a major change in the way that the relationship was conducted, because the dialogues and other mechanisms of engagement were no longer delivering significant enough change in terms of China's reform and opening up, and in terms of other issues that created challenges in the bilateral relationship. So you have a situation where Democrats and Republicans agree that change is needed and change has been initiated. And the tariffs, while they are problematic, especially the retaliatory tariffs, they also are leverage that I think any new administration would be foolish to just throw away completely. But I do hope that we're going to see at least some strategic elimination of tariffs in at least the first half of 2021 that will allow business to pick up a little bit and help with the economic recovery that we all know is needed and in the wake of the pandemic. But it remains to be seen.
While we're on that, do you have any sense for whether that would be, whether some of that relief, I know we're all just speculating, but that's what's fun about these kind of moments. Is there any sense for whether some of that relief, if it comes in later in the year, would be targeted to particular industries, or do you think it'd be kind of just reducing the overall tariff rate by, whatever, X%?
Good question. I think it could go either way. I certainly think that there are industries that that have been particularly hurt by retaliatory tariffs. For instance, ag is an obvious one. They've had a lot of subsidies to try to help them through it, but and through other crises that they faced in the last few years. But at the end of the day, pulling off some of those tariffs and getting China to do the same thing would really help the agriculture industry. I could see there being specific industries that are targeted for initial relief. PPE would be another one. Anything that is immediately related to responding to the COVID crisis. I also think that we're likely to see a Biden administration attempt greater cooperation with China on COVID vaccine distribution. So another reason why we might see something in the healthcare space, but that's really kind of pure speculation on my part at this point. I don't have any special inside information telling me that that's what's indeed being considered.
No, but that's I mean, you're close to it every day, so that's excellent. Okay, let's shift a little bit to deal making, and Catherine, that's your something you have been doing for years and years. It used to be, for the most part of my career, people talked about China and they'd say, yeah, joint ventures are the way to go. Not only for a long time were they sort of mandated, but even when they weren't, it just made sense to have a partner on the ground, but to also put in money so that you're doing something in China together, and you have a local partner to help support you. These days, and maybe that hasn't changed much at all, but I'm curious to get your view. If you're a company in Utah that's looking to get into China, what are the good sort of approaches from a commercial or transactional perspective?
Sure. China continues to open up. So in the earlier days, a lot of JVs were done primarily for two reasons. One was China has regulations that prohibits, in some instances, prohibits foreign companies from owning the majority of Chinese companies' equity. And the second reason was sometimes the US party feels that they needed a local partner to kind of, give them some guidance and then connected them to the right players locally. But anybody who was involved in those JV deals knows that a lot of those JVs didn't go very well. They ran into disputes with JV partners, and they got a lot of governance issues. So there seems to be a trend to try to get out of JV. So Goldman Sachs is going to turn its Chinese operation from a JV into a wholly foreign owned corporation called a WOFE. So it's going to be 100% subsidiary of Goldman in China, partly because the prohibition on investment banking ownership, 100% investment banking ownership by a foreign company, has been lifted. So that kind of continued open up of the investment market has presented opportunities for American companies, especially financial firms and private equity funds, to make investments in China and to kind of get away from the JV headaches and then just do what they want to do 100%. Another area that's really interesting is commercial deals. We have seen a lot of US-China commercial deals, especially in the biotech space. And when I call it biotech, I use the phrase in the broadest term, possible. So it includes life science, medical device, software, diagnostics, imaging, anything related to life sciences. That's a really hot area for commercial deals to be done between US and China. And I heard that is an important sector for the Utah local economy as well, especially the diagnostics and the medical device space. I've seen a lot of CMO, CRO type of deals done in China. Also a lot of distribution rights, clinical trial rights, development rights being given to a Chinese partner by a US party. And because the opportunity there is you can apply for the CFDA, the Chinese FDA approval of the same product, get FDA and the CFDA dual track for a new product. So whoever gets the approval first can launch and can start to develop a market. That is an area that's really hot. And in addition to the commercial deals, I've also seen a lot of kind of the inbound investment from China to US, including from China to some places in the Midwest. And then again, biotech is a very, very attractive area for Chinese investors. I've seen fewer M&A kind of direct 100% acquisition deals by the Chinese these days, partially because of capital outflow restrictions from the Chinese government, partially because of the investment restrictions from the US government under the CFIUS regime. But I do see a lot of PE and VC types of deals, basically minority investments by Chinese companies in US companies, 10% or 20%, combined with this commercial deal, right? So you give, for example, your medical device company in the US, you need funding, you got a Chinese investor, they invest in 10% of your, preferred B. And then at the same time, you give them the China development and distribution rights of your products under development. That's something very common these days. So I'll stop it here, but I think Justin can probably talk more about the M&A and how PE and VC deals and how CFIUS impact those deals as well.
Thanks, Catherine. And I think let's go to Justin. But just before that, on the licenses back to China, that's obviously been a historical concern. If you license IP into China, do you lose control of it? Do you see people doing anything differently these days on that piece, or do they just realize that carve up the world, let their licensee use the IP as they will in China, but just the U.S. partner make their money in the U.S.
So the due diligence, including the vendor or the licensee due diligence, especially when you license out to a Chinese partner, will be extremely, extremely important. Anybody doing licensing deal probably have a normal checklist regarding, what kind of things you need to look into as part of your due diligence into the licensee. And on top of that, we would add at least 5 or 6 different things if your licensee happens to be a Chinese business partner. We will look into possibilities of doing not only the paper-based due diligence, where you go into a data room and you review the documents provided to you by your business partner. We also would do what they call it an investigative due diligence, because sometimes you cannot just only rely on what they want you to see. You want to be able to do some independent check. So we've been able to get into Chinese government databases and some other private investigation track records of the Chinese licensee regarding, have they gone default on any past court judgments? Have they been involved in any IP disputes in the past? It's also very important to add possibilities in the licensing agreement to add IP audits or revenue audits, because if your licensing revenue model is as an upfront fee plus milestone-based royalty payments, well, the royalty payments will likely be a percentage of the sales or percentage of a certain matrix. And then you want to make sure you have the ability to double check whatever the milestone is. So to build in the IP audit or the revenue audit clause in the licensing agreement will be very important to protect the American company's interest going forward.
Those are great tips. Thanks, Catherine. I love what you said about some of the, about the process, but also about the relationship side and doing your due diligence. We oftentimes think if I have a strong contract, I'm good. But as you just pointed out, a lot of times it's more about the work you've done to make sure the person you're working with is someone you can trust and work with over time.
Oh, absolutely. Because disputes resolution is expensive and cross-border dispute resolution is even more expensive, right? So, okay, you have a really good contract, but what if the Chinese party just doesn't perform the contract? How are you going to remedy the situation? Okay, you can sue them or you can go into arbitration. These are extremely expensive and the judgment or may or may not be enforceable in China. So I think before talking about contract terms, you have to be aware of who you're dealing with, who you're doing business with, and do some diligence on the business partner.
Justin, following up on what Catherine said about the different types of investment in the U.S., I'd love to get your sense for what you're seeing, both in terms of of what's coming in from China as compared to how it might have used to been, or really just, I mean, you see the filings people are making and what they're trying to get through. What types of deals and what quantity are you seeing coming into the U.S.?
Thanks, Troy. I hope we get to a point where we can start to see additional investments in the United States from China again. But over the last few years, those numbers have fallen off the chart, and we have not seen the amount of interest in U.S. businesses from China, largely because of some of the institutional challenges that foreign investors are running into here in the United States. As Catherine and others have mentioned on this call, there's a broad political consensus in Washington right now from both political parties regarding the challenges of dealing with China. This unfortunately has resulted in many companies being caught in the middle of this trade war, and global companies in many ways are being asked to pick a side, which can impact where research and development is performed, where inputs are sourced, where manufacturing will occur, and where a company ultimately will elect to sell its goods maybe in the first instance. There's a number of tools the United States has used to impact transactions, and particularly the broad authority that was given to the Committee on Foreign Investment in the United States, or CFIUS. Additionally, there's U.S. export control laws and additional restrictions on technologies that can be exported that have been levied on new and emerging technologies here in the United States. Both CFIUS and export control laws can be talked about at length, but I want to talk about just a couple of important things that people need to understand about how CFIUS can affect cross-border transactions. As was mentioned earlier, many companies are looking for strategic and financial investors, and there's a lot of competition for that. By law, CFIUS is mandated to assess the potential national security consequences of the interaction of identified threats and vulnerabilities that relate to that proposed cross-border deal. It does so by addressing two questions. One, does the foreign person present a threat to the United States national security? And second, would the acquisition of a U.S. business by that foreign person expose a potential vulnerability? This authority dates back to the 1970s. And if a national security concern is identified, the president has the ability to prohibit a transaction from going forward or to order a foreign person to divest their ownership in a U.S. business. Currently, the United States government views investments from countries like Russia and China with the most concern, while investments from countries from Canada or the United Kingdom or Australia are less concerning. Now, this doesn't mean that the committee will identify concerns with all Chinese investments. In fact, some do get through the process. It also doesn't mean that friendly nation investments will all be approved. They're looked at on a case-by-case basis. But following some recent changes in law that were passed about 2 years ago, U.S. businesses and foreign partners now must consider whether they're obligated to notify the federal government prior to closing a deal about their transaction. If they don't and they're required to, they can face significant financial penalties, including up to the value of the transaction. This new requirement affects investments across multiple industry sectors and investors throughout the world. And even when a notification is not required or mandated by law, many companies are electing to notify the committee voluntarily, as it provides a regulatory certainty that the government can't review that transaction post-closing. Over the last 10 years, we saw a dramatic increase in the number of transactions that the committee reviewed. And at the same time, the number of Chinese transactions increased as well until 2019, when Chinese investments in the United States declined significantly. One other thing that I think is very important for companies to understand and businesses doing cross-border deals is that earlier this year, CFIUS established a new office whose primary purpose is to monitor transactions that aren't voluntarily notified to the committee that may raise national security concerns. This office is extremely busy and is reaching out to companies at a feverish pace. We understand they've looked at transactions that have closed 1, 2, 5, or even 7 years ago. And while most of these transactions involve Chinese investors, they're looking at deals across all sectors from all investors across the world. To answer kind of your last question, obviously there are certain areas where Chinese companies cannot invest. Traditionally, transactions involving a cleared defense contractor with access to classified information, or companies that produce goods and services that support U.S. military, are viewed as non-starters. But there are a few categories where an outright acquisition by a Chinese company may be difficult to get through this climate. This would include companies that have sensitive data of U.S. citizens, as well as companies that operate critical infrastructure in the United States.
Justin, going back to that, I found it super interesting that group that you mentioned that's sort of going back and reviewing past transactions. Do you expect under a Biden administration, do you expect that energy level to drop off, or is that one of those, policies that might continue on?
It'll be a policy, in my opinion, that'll continue on. The committee's always been authorized to do that. When I was at the committee, I'd maybe reach out to a couple of dozen a year, but it was a collateral duty that I had. Under the new law that was passed 2 years ago, this office was given resources and staff and told, this is your priority. You need to go out and look at transactions, and they'll continue to go forward. And again, this was based off of that bipartisan bill that was passed 2 years ago.
Okay, well, that's super interesting. Miles, if I can put you on the spot for just a second, do you know, we were talking about sort of investment in, so we've been talking about investment into the U.S. Have we seen anything in Utah recently from China? I mean, there's been very little across the U.S. So, but curious if there's anything special about sort of some of the Utah industries that might have attracted any.
That's a great question, Troy. And I think my perspective is very similar to Justin's in that things have halted over the past 18 months or 2 years. I remember it's probably about 18 months ago, there were a few different Chinese investors were looking at and non-sensitive stuff, real estate, buildings, that type of work. But when the climate became what it was, starting about 18 months ago, everything just slowed down. I think people on both sides recognized, there's a lot of uncertainty here. It's not worth continuing down this path until we have a better sense of what could be approved, what the CFIUS process is going to be like. And so I'm not aware of hardly any Chinese investments into Utah over the past 12 to 18 months or so.
Well, and that's super good to know, because my sense is that the trend, like as Catherine pointed out, and you and Justin, now it's probably not so much on the formal investment of capital, but a lot of commercial activities. People are sorting out their supply chains, and that's a lot of commercial, if not investment. Okay, we've got some questions piling up here, so let's go to some of those. First one we'll do is Alex Kennedy. Thanks, Alex, for joining. This says, so he asks, do you see any significant imminent threats other than tariffs, either from the U.S. side or the China side, to U.S. companies that have large subsidiaries, facilities, or employees based in China that derive a significant portion of their global revenue from that market. And yeah. So anyway, Anne, I think this one feels like a good one for you, and companies like Alex's. I think some of them are even members of your association. So this would be very interesting your thoughts on this.
Absolutely. So I guess the short answer is I do think that there are numerous other concerns beyond tariffs, unfortunately. I think Miles in his introduction talked about how we wouldn't be going back to the kind of US-China relationship that we had over the past 40 years. And it's absolutely true. I 100% agree. And in previous years on the Hill, you might see Congress get fixated on one thing or another related to China, but China wasn't a dominant issue. Today, that's totally different. Right now, we've seen more than 490 China-related bills and resolutions introduced in the 117th Congress, so just in the last 2 years. And to underscore how significant this is, I like to compare it with another foreign policy issue that catapulted to the top of Congress's agenda and garnered major bipartisan support, which is the 9/11 attacks. In the 107th Congress in 2001 and 2002, after the attacks, there were 130 counterterrorism related bills and resolutions introduced. I know I remember vividly the mood of the country and the unity of Congress in responding to that moment. And yet the zeitgeist over China and Congress right now would seem to be just exponentially larger. It's also one of the very few policy areas where there really is bipartisan support. And so unlike in previous years where Congress might get focused on making currency manipulation a countervailing duty, or something that we could go after with countervailing duties. And that would be the major China issue that affects business that everyone in DC was talking about for some extended period of time. Now we see just a whole rainbow of China-related issues that have a business aspect to them, including a lot of issues that business traditionally would stay away from advocating on: human rights issues, national security issues. So a few of the things that I think are worth paying attention to. First of all, sanctions related to the Hong Kong Autonomy Act. There is a piece of that act that requires the State Department to identify individuals responsible for suppressing democratic freedoms in Hong Kong, which the State Department did in October. And then 30 to 60 days after the State Department does that, Treasury is supposed to come out with a list of financial institutions that have conducted significant transactions with those individuals. And those financial institutions are then vulnerable to secondary sanctions. And this is something that a lot of financial services companies with a presence in Hong Kong have been worried about and paying close attention to. I think that right this moment, the potential fallout from that has been mitigated somewhat by the fact that Mnuchin announced after the State Department's report in October that he was giving companies 30 days to unwind their business dealings with any of the individuals listed, and also there were only 10 individuals listed. But those financial institutions, that list that Treasury is supposed to name, that's due on Sunday. So that's an imminent action that could have some significant impact on financial services firms in particular. Then restrictions on US capital flows to Chinese companies. The Holding Foreign Companies Accountable Act, which Catherine mentioned, was introduced by Senator Kennedy, passed the Senate a while back, passed the House just last week, is on the president's desk. That could have spillover implications and also could prompt retaliatory policies on the Chinese side. I mean, we hope to see continued opening of the financial market in China, and we've seen good openings since the Phase 1 deal was signed. But I could certainly see a situation where the Chinese government decides that if Chinese companies can't list on US exchanges and can't have access to US capital, which is a potential consequence of this legislation, then they're gonna likewise restrict US access to Chinese markets. Another one is supply chain security and sourcing restrictions. lots of proposed legislation and discussions about addressing perceptions that the U.S. is over-reliant on China, over-dependent on China in certain supply chains, or that it is complicit in situations like forced labor, Uyghur forced labor in Xinjiang province. That is another one where I think that there just could be a lot of activity, and there's the Uyghur Forced Labor Prevention Act, which could pass any moment in the Senate. And if it does, would create a presumption of forced labor for any product made in whole or in part in Xinjiang or by companies elsewhere, by factories elsewhere in China that have certain agreements with parts of Xinjiang that involve employing Uyghurs that have come out of re-education centers. Any product. So whether it is footwear, apparel, textiles, chemicals, plastics, electronics parts, something made with rare earth minerals, which Xinjiang is a major source of. So this could have some major implications, and it is this assumption of forced labor would prevent any import of these items, and it is a presumption that's really hard to overcome. So those are a few of the things worth watching, and there are more.
And Troy, just to put an exclamation point on that, Dan Harris is a China expert that we've done several events with, somebody I really respect his perspective. He contributes to a blog called the China Law Blog. And in August, he wrote a blog post titled How to Prepare for the Worst in China and Why You Should. And he's somebody who's got deep relationships in China and a lot of business in China, has been there for decades. His point is, and Anna just touched on several areas that would be concerning to various degrees for different companies, but the underlying point is, and Alex, you asked a phenomenal question because it's true for many of the companies that are joining us today, is a company should be looking at everything. And they should be looking at contingency plans and saying, okay, if in the pandemic show, the borders can close very quickly. And as Anna laid out, there's several different bills and regulations that would fundamentally alter a company's operations in China. And so companies should begin now thinking through what are the various worst case scenarios and what would the company do to adapt. And it's worth the investment in developing these plans. And maybe you get lucky and you don't have to use them, but there's no harm in being prepared, and it's worth every penny that a company would spend to be prepared, so that if the worst happens, whatever that means for your company or your industry, you've thought through what you would do, how you would react. And that's particularly important if a good portion of your global revenues are tied up in one way or another with China.
Thanks, Miles. That was a great perspective from both of you. It does feel like there's, well, it doesn't feel, I mean, there is significant pressure on, on the cross-border relationship right now on the economic side. Let's see, well, and in fact, and sort of one more thing to follow up on the point you made about the legislation regarding, the sourcing from forced labor. A few years ago, there was a requirement the SEC implemented on conflict minerals. And it didn't seem like a big deal at the time for companies to trace and report whether or not any of their materials included. That turned into a highly expensive and elaborate compliance effort for companies that had no idea or wouldn't have expected that they had, that there's any chance that conflict minerals were in their supply chain. But the way the global supply chains work, when you start going backwards, it's very hard sometimes to confirm affirmatively that your supply chain doesn't touch somewhere. So it's a lot of pressure. It's tough times in these ties. Okay, let's any other well, we better, given time, let's keep moving on. There are a few other questions here. There's one from Joy, and we may, I'll speak it for the panel. If anyone has a view, it may be that we would need our government contracting lawyer on for this one. So I don't know if we'll be able to answer it, but she asks whether, they're importing some freezers from that Pfizer is using to store and ship COVID vaccines. They have an order for 4 million of these freezers from the military, but the problem is that the units are manufactured in China. So the base question is, the U.S. government agencies, is there a way to work? Is there a workaround for military contracts on the normal, some of the normal requirements that keep you from purchasing from abroad or from China in this case.
Yeah, Troy, you're right. Dorsey has a government contract practice group. So a military contract, the group will typically look at the clauses in the contract. There should be a disclosure requirement regarding the foreign source of the products. I don't know if the military will make an exemption in this case, given its urgent procurement for COVID vaccine. So, the prudent answer would be to have our government contracts lawyer to look at it and especially focus on the disclosure clause.
Yeah. Thank you. I think that's probably the best answer for right now. Question from Michael Rhodes says, good evening from the Middle East. There is obvious concerns on doing business with individuals or private companies. What about doing them with SOEs, so state-owned enterprises? These are the large conglomerates in China. And in my experience, this is a great, interesting question because there are a lot of pros and cons to going that route. But his question is that easier? Are there better protections there for U.S. company? I think he means investing in China. If people want to answer that more broadly in terms of doing a project in Europe with an SOE, through the Belt and Road program, or in the U.S., I'll open it up to anyone's thoughts on that.
Yeah, I have dealt with a lot of Chinese SOEs. Some of those are my clients. And then also some of our US clients encounter them either in China or in the Belt and Road countries. The SOEs, they're different species, I think, compared to private Chinese enterprises. They were not the drivers of Chinese economy, although the recent government focus seems to be 国进民退, right? So to advance the country, advance the SOEs, and then sometimes at the cost of private enterprises. You see what's happening to Ant Finance. Their upcoming IPO got pulled. There was an article, I think, Troy, you shared with us on Wall Street Journal today regarding, again, Chinese government focusing on promoting the public sector, the SOEs, and kind of pushing back on the private sectors. But SOEs, even though they're large and then they have a lot of financial resources, they present their unique set of risks. So Troy, if you can go to slide number 10, Anna mentioned these sanctions earlier. This slide actually gives you an overview of all these sanctions. Huawei is a private company, but most other companies on the sanctions list are SOEs or military-linked companies or government-linked companies. The companies that have a role in building the island in the South China Sea, those are all government companies. Otherwise, they wouldn't even get that contract. And then Huawei arguably has government ties as well. So when you deal with government SOEs, you have a heightened risk of hitting one of these sanctions. Then another thing I want to highlight is the slide on page 18, the FCPA, the corruption risk. Because when you deal with an SOE, it's as if you're dealing with the Chinese government directly. Go back one page. So if you look at this map, this is the Transparency International, what we call the corruption map. The deeper the red, the more corrupt a country is. United States is very good, it's yellow, right? But look at China. China is considered one of the most corrupt places to do business. And if you deal with an SOE, I don't know if you're a sales business, you want to sell to the SOE, you sell to a government-owned hospital, sell to other types of SOE, you have to be very, very careful of the FCPA, the corruption risk, because that is the DOJ, the Department of Justice's enforcement focus to make sure US companies doing business in China will not violate the FCPA regulations. So you got the heightened FCPA risk when you deal with a Chinese SOE. But again, it really depends on the sector. In some sectors, you have to deal with the SOE. In other sectors, I would advise clients to focus on the private players rather than dealing with the SOEs.
On inward investments from SOEs, they receive heightened scrutiny from CFIUS. In fact, there's special procedures that the committee has to follow when they evaluate investments from a state-owned enterprise. And so they definitely are looked at differently as they invest here in the United States.
Having worked on joint ventures with SOEs, there's a lot of value there because they're huge, and you almost they have a lot of pull with the government. But on the flip side, they'll do whatever the government wants them to do, and so I've seen that cut both ways. Okay, I'd like to thank everyone. If anyone has any final words, we're a little over time, but if there are any final words, please. I don't want to cut anyone short. Otherwise, I'll just say thanks to everyone on this panel, and thanks to the people who participated, spent an hour listening about this this very interesting subject. And so anyway, any last words, anyone?
Thank you, Troy, very much for moderating this, and Catherine, Justin, and Anna, thank you so much for sharing your expertise, and thank you to everybody for participating. We had a few questions we didn't have a chance to get to, so we'll ask the panelists if you'd be willing. Hannah will email those out to the panelists, and we'll get some responses and email that out to all the participants, and so we can make sure that we answer all the questions that were asked today. And in closing, China is not an easy issue to work on, and that's abundantly clear. As you work on your contingency plans, as you assess what this means for you and your company, please, again, don't hesitate to reach out. We're happy to connect you with the experts that can help you answer the questions that you need to answer as you work on your contingency plans and look for future programming on China and other countries as well. Anna, you don't know this yet, but we're going to ask you to see if the U.S.-China Business Council wants to partner on a half-day seminar at some point in the first quarter of next year. I'm talking to the Council on Foreign Relations and a few others. We can pull that together. So everybody keep your eyes out. We'll keep the information coming and doing everything we can to get you the expertise and the perspective that you need to make smart business decisions as you move forward through these challenging times in the U.S.-China relationship. So with that, thank you, everybody. Keep an eye out for some email with the slides and answers to the questions we didn't get to, and we'll be in touch.